Hello all, welcome to Paritranaya IAS Academy. In this video, we shall discuss about the budget in brief and in detail about the difference between the revenue budget and the capital budget. If you look at our constitution, nowhere the term budget has been used. Then what do we have in our constitution? In our constitution, in order to refer to budget, we have a statement called as annual financial statement. Annual financial statement is mentioned in Article 112 of the Constitution. So there is no explicit mention of the term budget, but there is a mention of the term called as annual financial statement. So what does the budget indicate? The budget indicates estimates of receipts and expenditure of the government. Okay. So for example, for 2023 and 24, for 2023-24 financial year, which extends from April 1, 2023 to March 31, 2024. So for this particular period, budget will indicate the estimate of receipts and expenditure. Receipts means what all money will be coming to the government, and expenditure means what all money that will be going out of the government. So no term budget used in the constitution. Annual financial statement 112, it deals with the budget. Next, also constitution explicitly mentions that there should be a distinction between the revenue expenditure from other expenditure. So whatever the expenditure you are showing, so one you have to show revenue expenditure and the other you should show capital expenditure. So that is why the convention has been established, wherein we have separate revenue budget and next capital budget. So in this video, we shall see in detail the difference between the revenue budget and the capital budget. Okay. So revenue budget. So when we consider receipts or expenditure, they can be classified into revenue receipt or capital receipt. If it is expenditure, again we can classify them as revenue expenditure or capital expenditure. So here we shall see exactly what is revenue receipt, what is capital receipt, what is revenue expenditure, what is capital expenditure. So first we shall begin with revenue budget. So here revenue budget consists of revenue receipt and capital receipt. So revenue receipt and revenue expenditure. So again revenue receipt, it consists of tax revenue and non-tax revenue. So what can be an example of a tax revenue? Proceeds of taxes and other duties levied by the union. Okay. So whatever the tax the government collects, so where it will go, it will form a tax revenue. It will form tax revenue. So can you give me an example of a tax? An example of a tax can be income tax or goods and services tax. So whatever the government earns from income tax and whatever it gets from the goods and services tax, it is considered as tax revenue. It is considered as tax revenue. Now next, what is non-tax revenue? Non-tax revenue, interest on investments made by government. Investments made by government. So there are different types of investment. Now we shall consider with the help of an example. So let us assume government has kept a deposit in some bank. Let us assume SBI. So government has deposited, let us assume 1 lakh rupees. 1 lakh rupees. So every year this 1 lakh rupees, it will earn some interest. Let us assume the rate of interest is 10%. So after 1 year, this 1 lakh rupees will earn 10,000 rupees. So whatever this earning is there, 10,000 rupees, where it will go? It will go to the government. But whether it is considered as part of tax revenue? No, it is considered as part of non-tax revenue. It is considered as part of non-tax revenue. So this is interest on investments made by government. It will form part of non-tax revenue. Next, dividends on investments made by government. So what are dividends? So government would have invested in some company. Let us assume government has invested in a company called as TCS. Okay, just example. So every year when the TCS gains profit, So what it will be doing? It will be giving the dividends to the shareholders. Okay, shareholders. So as government is also one of the shareholder, so TCS will transfer every year the dividend to the shareholder. So that share, when the government receives, what it will form? It will form part of the non-tax revenue. Non-tax revenue. Next, fees and other receipts for services rendered by the government. Okay, rendered by the government. For example, let us assume train is a service. Train is a service. So now whatever the train ticket, to purchase a train ticket, whatever the fees we pay, okay, so where it will go, whether it will form a part of tax revenue or non-tax revenue. So it will form a part of non-tax revenue. So this was about non-tax revenue. Next we shall see about what? Revenue expenditure. Revenue expenditure. So the first one is formal running of government departments. So whatever the expenditure goes towards the formal running of the government department, that form part of the revenue expenditure. For example, to run a government department, every month we have to what? Make salary. Okay, we have some other expenditure, for example, cleaning, pen, pencil, etc. So all these expenditure, they are part of what? Revenue expenditure. Revenue expenditure. Next, rendering of various services. Rendering of various services. For example, now government extends a service of free hospital services. Free hospital services. Okay, hospital service. Or let us assume let us consider the example of COVID vaccination. So the government is spending for COVID vaccination. So where does it fall? So it falls under revenue expenditure. It falls under revenue expenditure. Next, making interest payments on the debt. Now government, whatever the loan it has borrowed, every year it has to pay the interest. Every year it has to pay the interest. So whatever that interest it is paying, so it forms a part of what? Revenue expenditure. Revenue expenditure. Now meeting subsidies. Now government provides a lot of subsidies. So let us take an example of LPG. Okay, LPG. So in our home we have LPG cylinders. So every month or once in 2 or 3 months we fill the LPG. So when we are refilling the LPG, let us assume somewhere we are paying 800 rupees, but the actual market cost of LPG cylinder is 1000 rupees. So we are paying less. We are paying only just 800, but the actual cost is 1000. But why will a company bear a loss of 200? So the company which is supplying LPG to us, it will not bear loss. So that extra 200 rupees on our behalf, that 200 rupees on our behalf, government will be paying to the company which supplies the cylinder. So this 200, it is a subsidy. Okay, subsidy. So government spends a lot of money on subsidies. So all the amount which goes towards subsidies is considered as part of the revenue expenditure. Okay, revenue expenditure. Next, grants in aid. Now government gives some money which will not come back. For example, now central government will give some fund to state government. Will give some fund to state government. For example, to build toilets, let us assume. Okay. So the amount which the central government has given to the state government, so this amount will not come back to the central government. It is not in the form of a loan. So it will not be returned. So such amount which has been paid, which will not be returned, is called as grants in aid. Grants in aid. So in general, what we need to understand here is, broadly, an expenditure that does not result in the creation of assets for the central government, for the assets for the government of India, is considered as what? Revenue expenditure. For example, now government will spend in two ways. One is salary. One is salary. Let us assume salary. Another one is to purchase land. Okay, land. So among the salary and land, which one is considered as asset? So land is considered as asset because once you purchase it, it will remain with the government. But whatever we have paid as a salary, it will not come back. It will not be with the government. So whatever which has been spent, okay, which will not come back, so it will form part of revenue expenditure. So whatever has been created in the form of asset, so whatever the amount you have spent on purchasing the land, that will be part of capital expenditure. Okay, so we'll get a clear picture once we start this, once we complete the discussion of both revenue expenditure as well as capital expenditure. Next, all grants given to the government, all grants given to the state government or union territories and other parties are also treated as revenue expenditure, even though some of the grants may be used for creation of capital assets. Very important. Now, let us consider an example. Central government is there. Central government is there. So let us assume Karnataka state government. So central government will give some fund, will give some transfer some fund. Let us assume 1 lakh rupees. Central government will transfer 1 lakh rupees to what? Karnataka state government. Karnataka state government. So Karnataka state government can use it for multiple purposes. Let us assume in this 1 lakh rupees, 50k rupees it will use to pay the salary. Next 50k, let us assume it will use to build a school. To build a school. Now, this salary, it is considered as revenue expenditure. This building a school is considered as capital expenditure. For whom? For the state government. For the state government. For the state government, it is considered as what? Capital expenditure. For the state government, this is considered as what? Revenue expenditure. But for central government, whether the state government has used it for revenue expenditure or for creating an asset, irrespective of that, it will always be considered as part of revenue expenditure. Okay, whether the state creates an asset or use it for some salary or other revenue related things, then also it will also always be counted by the central government as what? Revenue expenditure. Very important. Very important. Next, we shall discuss about capital budget. Okay. So capital budget. So in the previous slide we saw about what? Revenue receipts and revenue expenditure. Here we will be seeing about capital receipt and capital expenditure. Now, see here, loans raised by government from public termed as market loans. Now, government requires money for many purposes, for building school, for colleges. Sometimes whatever the tax it collects, it will not be sufficient. So it requires extra money. So when it requires extra money, it will raise a loan. Okay, it will take loan from the market. So when it takes loan, so that loan has to be credited to some account, right? So it will be credited into Consolidated Fund of India. But what whether this loan which we have got, whether it will be considered as revenue receipt or capital receipt? So it will be considered as capital receipt. Whatever the loan we are taking, it will be considered as a capital receipt. Capital receipt. Borrowings by Government of India from RBI and other parties through the sale of treasury bills. So later on we shall see what are treasury bills and how they are used. So now whenever the Government of India borrows from the RBI, it takes money from the RBI. So whenever the RBI gives that money, so that money forms part of capital receipt and it does not form part of revenue receipt. Next, loans received from foreign governments and bodies. Let us assume India receives a loan from IMF. So whatever the loan India receives from IMF, so this loan amount will be a part of capital receipt and not revenue receipt. Okay, not revenue receipt. Next, disinvestment receipts. Disinvestment receipts. What is disinvestment? So disinvestment is government will what? Sell some of its stake in a government company. For example, let us assume. So let us consider an example of a government company like BSNL. Okay, BSNL. So now let us assume 100% it is owned by government. 100% it is owned by government. Now let us assume government has all the 100 shares. Okay, all the 100 shares. Let us assume rate of one share is equal to 100 rupees. 100 rupees. So government has 100 shares. So the rate of price of each share is 100 rupees. So 100 shares is equal to 100 into 100 is equal to 10,000. Okay, 10,000 rupees. So the value of BSNL is 10,000. Now government sometimes it wants money. So what it will do, among the 100 shares which it has, it will sell, let us assume 10 shares. 10 shares it will sell. When it will sell 10 shares, how much money it will receive? 10 into 100 is equal to, it will receive 1,000 rupees. 1000 rupees. So whoever has purchased the 10 shares, he will be giving 1000 rupees. So where this 1000 rupees will go? Whether it will be part of revenue receipt or capital receipt? It will be part of what? Capital receipt. It will be for part of capital receipt. Capital receipt. So we have seen while discussing the revenue receipt. So whatever the dividend comes, dividend will go into revenue receipt. Whatever the interest you earn, it will go into revenue receipt. But whenever you sell a share, whatever the proceeds, profit you receive, so that will form part of the capital receipt. Okay, capital receipt. Next, here, recoveries of loans from state and union territory governments and other parties. Now, central government gives loan to state governments. Okay, state governments. It will also give loan to some union territories. Let us assume Delhi. After few years, this state government will return the loan back, will return the loan amount. Similarly, union territory will also return the loan amount which they had taken before. Now, whatever the amount that has been returned, so where it will go? Whether it will form part of revenue expenditure or capital expenditure. So this will form part of the what? Capital expenditure. Capital receipt. Capital receipt. So here we saw about capital receipt. Next we shall see what is capital expenditure. Capital expenditure. So previously we saw about revenue expenditure. Now it is capital expenditure. So expenditure on acquisition of assets like land, buildings, machinery, equipment, as also investments in shares, etc. all form part of capital expenditure. For example, when you buy a land, when you purchase a land, so whatever the amount you are spending on it, it forms part of capital expenditure. When you are constructing a building, you have to spend money. So whatever the money you are spending, it is part of capital expenditure. So when you bring up machinery, whatever the amount you spend, it forms part of capital expenditure. Next, investments. Now let us assume you purchase some shares of a company. So whatever the amount you have spent on purchasing the share, so that will form part of the capital expenditure. Capital expenditure. Next, loans and advances. Loans and advances granted by the central government to the state and union territory governments. Now we have seen, so central government, whenever it is transferring some amount to the state governments, it can be of two types. One is grants in aid. Grants in aid. Another one is loan. Okay, grants in aid and loan. So whenever we are giving grants in aid to a state, so that amount will not come back. That amount will not come back. So such an expenditure, whatever we are spending, it will be part of revenue expenditure. Revenue expenditure. But now, when we give to a state government amount, money in the form of a loan, so after a few years, that state government will return back the amount. Return back the amount. So the amount which we are giving to the state in the form of a loan, which will come back in the future, so such an expenditure, it is considered as part of the expenditure. So such an amount is counted under the what? Capital expenditure. So here it is capital expenditure. Capital expenditure. Okay. Next, it may be a loan to a state government, or it may be a loan to a union territory, or it may be some government companies. Okay, as I mentioned, BSNL, some corporations or other parties. So whenever it extends loan, so loans means it will be giving out the money. So when the money is going out, it is expenditure. So this expenditure will be counted under capital expenditure. Okay, capital expenditure. So in this video, we discussed about budget in brief. So what does the budget mean and all those things. After that, we discussed the difference between revenue receipt, capital receipt, revenue expenditure, capital expenditure. So in the subsequent videos, we will be discussing about the other important topics related to economics. So before we close, so answer these questions in either true or false in the comment box. So first one is, interest paid on the loan raised by the government is considered part of the revenue expenditure. So in the comment box, you answer it as either true or false. The second statement is, subsidies form part of the capital expenditure, true or false. You should write it in the comment box. Next, grant given by the center to the states are considered as part of the revenue expenditure, irrespective of whether it is used to create assets or not. Okay, for all these three questions, so comment your answers in terms of yes or no in order to assess yourself that whether you understood the concept properly or not. Okay, so in this video we have discussed about the revenue and capital budget. So in the subsequent videos we'll be discussing about the other concepts related to economics. For all our further updates, subscribe to our channel and hit on the bell icon. Thank you.